Welcome to the Life Insurance Financial Education Podcast. We're pulling back the curtain on high cash value life insurance and how it can help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
This is Jing with Tech Exam Millionaire Club.
And my name is Carlo Vaquera with NetWealth Finance.
And today, we're going to be talking about expanding your bank. We talk regularly about infinite banking on this channel and the infinite banking concept. So keeping in that theme, how do we grow our bank? Our bank is essentially our first high cash value life insurance policy. And growing your bank might be adding additional policies to it. Before we get started, do you guys have any updates on any of your investments?
I'm still keep looking, try to buy some slow flip. I will keep you updated.
How are you looking for your slow flips?
Well, I now identified few cities, actually. So I'm going to regular MLS for sale by owner. I joined another group. There's a lot of slow flip members. So there's some wholesale deals as well.
All right. So networking, always good when it comes to trying to find real estate deals. All right. I've been covering quite a bit of options trading, trying to educate people on that on my channel lately, as well as getting back into doing that regularly. But outside of that, I don't really have any updates either. So let's hop into this topic, expanding your bank. I think a good place to start is going to be, what is our individual plans? And then we can expand from there and talk about different ways that other people might consider expanding their bank. One of you guys want to kick us off?
Sure, I'll start. I am planning to open policies on pretty much my entire immediate family, my wife and my children. I haven't yet started doing that. Just various things with lightning strikes and such have just changed how I'm moving cash and capital at this point. So for now, I'm focused on funding my own policies, but I do plan to open a policy on each of my family members to start. I think that I'm pretty well insured for current state. And next step is certainly a policy on my wife.
So let me dig into that just a little bit. You started your first policy, and what was your first expansion? What led you to your first expansion? And I guess what was the plan when you started your first policy so that we know why you had to expand it?
Sure. So my plan with the first policy was to fund at a pretty high level a whole life policy until my retirement time frame. That's a long funding whole life policy. And I went right into that also thinking that I was going to open an IUL. And so that's what I did a few months later, is open an IUL on myself as well. So that was the plan from the start. I'd also intended to open another whole life policy on myself, but I just didn't get a good health offer rating. I got top ratings for the other two policies, and I got a standard rating for the third. So I decided to not go forward with that one. And I was at that time moving some cash from real estate deals into life insurance policies. And that was the immediate plan. Going forward, at this stage, like I said, I have enough life insurance on myself. I do want to get a bigger policy on my wife as well.
And just to be clear, there's nothing wrong with a standard health rating when it comes to designing and growing a high cash value policy. Standard can do really well. But I imagine combined with the other things that were going on and the disappointment that you experienced since you got the good health rating from the other carriers, that's why you decided to hold off. Not that it was really a bad illustration at a standard rating.
No, it would have been fine. I could have gone forward with it. It was really, I had just gotten top health ratings from two other carriers. I don't know. I just didn't feel personally, I was like, I didn't like that they gave me that offer. And, you shouldn't really go into these types of things with feelings, but that's kind of what I did on that. And I did also kind of assess, I had enough life insurance on myself, and I was able to fund at a high enough level on those policies that I already had. So it didn't necessarily make sense for me to add that other one anyway for myself.
So your initial bank was set up with a very large number in mind, and you just haven't quite got to the point that you're going to expand. It sounds like mostly due to some lightning strikes.
Yes, I'm funding at very high levels, and it's a high percentage of my ongoing income in current state. That means that it is a lot, and I don't necessarily need to have more policies to fit more cash yet. But I still do want life insurance on my wife, so I do want to open a policy on her and nicely optimized policy. So that is something that is a next step, and still want to get policies on my children. So I don't actually have a need to expand out yet, but I think that I will in the next couple of years, I imagine.
So strictly from a life insurance perspective, you're the breadwinner of the household. So it made sense to do the life insurance and get those death benefits on you first before even thinking about expanding to the rest of the family.
Exactly. And I have term policies through my work on the rest of my family they're small, but yes, exactly. I don't really need to have life insurance on them. I want them to be set up for success financially if I do somehow pass away.
And then final question here before we move on to Jing and let her weigh in here, unless she has questions for you. But is there a trigger in your mind that says, now is when I expand my bank?
Oh, certainly if I was max funding just consistently my two policies, I would definitely want to get another policy to start putting cash through. And, that's going to be an easy trigger that I would identify.
I thought you were already max funding these. Do you mean max funding them without also borrowing them out?
Correct. Yes. If I was max funding and not needing to take any loans for whatever reason to cover lightning strike expenses and things like that, then that's where I would certainly say, oh, well, I'm not borrowed against. It might even make sense for me to borrow against these policies since I have so much unused capital inside of them. I might borrow against a policy to fund another one or fund more policies. At that point, I do want to make sure that I'm efficiently using my capital, whether that's in a life insurance policy or elsewhere.
Yeah, it sounds like you're taking a conservative approach to growing your bank, making sure that you're not just having too much in outstanding loans with your current policies. And so your current excess capital is going to pay back loans, free up equity in those policies. And at some point, you're going to feel like there's too much equity. It's time. Now I'm going to start funneling extra money to different policies.
Exactly. Since I am tapping these as an emergency fund, lightning strikes a bit of an emergency that I've had to deal with. So that's the main reason why I wouldn't go and tap them even further, is just because who knows what could happen. So if I didn't have these policies funded the way that they were, then I could have been in big trouble already. So that's really what it's about for me right now. And I will, once these things stabilize, I will certainly look to expand a bit further.
Excellent. Jing, do you want to tell us about your bank? I guess you heard all the kind of follow-up questions I asked Carlos, so feel free to just start talking, and if follow-up questions come up, I'll ask.
So for our family, we have a lot of term policies because when I got into life insurance field, I do think a lot of design is really, really, really slow. When we moved out of New York, we picked IUL because I want to start practicing it. I want to really know the inside and out, how we actually build up the bank. Then we can start using the cash value. I'm going the pretty aggressive approach. I found into my IUL policy and I'm taking the loan out to do the real estate investing. My hope is my real estate investing by the end of the day can give me at least somewhere 15 to 25% rate of return. And then I'm borrowing at 5%. So I do have that leverage. And the expansion will start when I have enough cash flow from the real estate. I will expand to whole life, my husband, and then also the kids. I think the cash flow is super important because I did not expect going to the real estate. I have to really tighten up my belt and turn around the mobile home park. At the single families are okay, but this mobile home park is a little too much for managing it. So our intention is to do it a little bit slower to really know the inside out and then really have the design how the bank will build up and then go to get the second policy, the third policy, and so on.
So you have a good size policy as the base of your bank, and you have death benefit coverage elsewhere. So it's not like you're in need of adding a policy to add death benefit. You're strictly just adding the capacity to grow your bank at a level that you're comfortable with.
Exactly. Those term policies, we have 4 term policies. They all pretty large size, especially as of now because our portfolio, the real estate portfolio is large. So that term policy have pretty significant importance to us. Just in case something happened, either me or my husband, all those mortgages, we will still have the ability to keep paying them. Since right now our mortgage is several $1 million already. So the couple of $1 million term insurance at this stage plays an important role.
Do you feel as though you're going to at some point convert those term policies into permanent policies?
I don't know. I think probably I'll take a look.
Are they convertible into a product you want to own as a permanent policy?
Exactly. And also it depends on the carrier as well. I don't know if they have the good product we can really design and optimize to make it a good IBC policy.
So I guess in the way that I was thinking about that question wasn't necessarily directly converting those, but I guess in the expansion realm, would you at some point think that you want to replace that life insurance need with a permanent product? Or would you just add to those term policies that you have?
We'll probably add. To me, I know people don't want to use it, lose it for the term insurance, right? That's the very basic form of life insurance. But to me, I need that big leverage. Just say I'm putting a couple of $100 or a couple of $1,000, I can get several million. I think especially the real estate business I'm doing, I think it's very important to have that peace of mind. It's very similar to the home insurance or car insurance. I'm okay with taking that as a protection. So that chunk of money for the full policy we have, it's just pure protection purpose, which is the core of life insurance.
All right. I love the diversity that we have among the three of us in how we've started policies, why we've started them, and when we think they're going to grow. So let me hop in with mine because it'll be a little bit different than yours. I started with our first infinite bank policy with a small IUL. There's actually 3 small IULs, one on me and one on each of my 2 girls. The idea being we're just getting started. We're just dipping our toes into it. And we know that IULs are good for borrowing against. Doesn't interrupt the cash growth in the policy. We have the opportunity for arbitrage. I don't even need to borrow from it. And I get the opportunity to get decent growth inside the IUL. It wasn't even for an infinite bank that I started those, but the underlying theme was there. Like I knew I needed to grow that cash value in there. It was a nice, safe place to grow it. From there, we were maxing those out and I was ready to expand and I had learned about the infinite banking concept. I knew I could do it with the policies I already owned. I had a greater ability to contribute than I had a capacity for my current policies to absorb. So we expanded into a whole life policy. Now the carrier that I chose was not a very flexible carrier. And so the amount that we committed to was a decent size, something that I knew every year when our anniversary rolls around, I'm able to commit that much. Because this carrier doesn't have a lot of flexibility, I need to make sure that I can put that money in on the due date. That limits what we can do because we got to be prepared for financial emergencies. We're not going to make this giant commitment if there's no flexibility around the size of that. That was my first actual infinite banking policy. And that was considered a small whole life policy. From there, I still had the ability to put in more, but I didn't want to have a commitment that I had to put in a large dollar amount. So I wanted the ability to have a large infinite banking policy without the commitment that I knew if I didn't have that money available, everything goes belly up. So we found another carrier that has incredible amount of flexibility. And there we opened 2 large whole life insurance policies. And we started to max fund those ones because we had the ability to do that. And I know that if I need to, I can cut that way back. I can put in 10 times less, or I can even put in nothing at this point because of the flexibility that carrier provides. So that was where we went and really started to expand our bank. And I had a goal in mind, I had a certain number in mind that I wanted to contribute over the first 7 years to those 2 policies. And the design that we did, that's our accelerated funding period. We grow it. I'm going to be very aggressive. We're going to max fund those policies, no matter how I have to get the money to do that, even if I have to use leverage to max out those policies, knowing that after 7 years, if I have loans outstanding, I pay the loans back. I no longer have that large commitment, and we'll focus on growing our other policies. We've since added a few policies. We haven't finished the max funding of those. We're in year 6. This year is going to be year 6 for those. I put out update videos on my channel every year on these policies. So if anybody's interested in seeing the specifics, you got to go to my YouTube channel and find those videos. But I show everything that's going on with all of the policies that I own. We now currently own 13 policies, a mix of whole life and IUL. Now I expanded the last 4 of them sooner than I expected to. And that's because a new product came out that I really, really liked. And we just upped our timeline a little bit. I was planning on getting them after I finished my whole life ones next year. So we just bumped those up a little bit in order to take advantage of a program that was being offered along with that new product. There was an automatic health upgrade program that we decided to take advantage of that because my wife was getting the standard rating, which, like I was telling Carlo, standard's not bad. We have a big whole life policy that's a standard for her. But I was able to get a preferred plus rating because of this upgrade program in a new IUL. And so we decided to take advantage of that one. So that's where we're sitting at with our 13 policies. The decisions to expand had to do with max funding certain policies over a certain time frame. And that was a plan set up when we first started it. As our income grew also, we found out we were able to expand sooner. We were able to expand some smaller numbers. We had the desire to open policies on our kids when we got the opportunity. And so we just kind of started doing that, and I'm pretty happy with where things are at. But compared to you two, I've been super aggressive in adding policies and growing and expanding our infinite bank. I don't know that I'm going to slow that down either. I really like my infinite banks as like the place I can go back to. It's such peace of mind that I don't hardly have to spend any time thinking about those. And I'm free to go play in the market and take my risks, trading options and doing all the things I like to do in that area. So this has worked out really good for us.
I have a question. Do you currently taking loans, all of them, or you're just in your accumulation phase?
Oh, yeah. I'm in the accumulation phase for retirement. When I talk about accumulation phase, I'm not talking about accumulating just inside my policies. I like to do everything all at once. I definitely take on more risk than a lot of other people, and more risk than I recommend other people do. But that's because I know myself. I'm a workaholic. If I need to make more money, I go make more money. That's basically the bottom line. I'm not too concerned about the commitments I have, but I also have a number in mind that says if I'm doing too much. So I'm constantly moving money around. You see my logo of my channel. It's Cash Flow Pro. I manage that cash flow really well in order to optimize the use of it. And I'll spell it out this way. The best use of any high cash value life insurance is to max fund it. You want to put as much money as the government will allow you to put into that policy. There's a reason that they limit it. So we want to take advantage of that. So any policy I own, my number one goal, before I do anything else in my life, before I put money in the stock market, before I fund my retirement accounts, my very first thing that I do is I put the maximum amount into my policies each year that they will let me as soon as possible. I know that that's the best use of those policies. So that's our number one goal. Once I have those funded, any cash flow that I have goes to lines of credit. Whatever my line of credit is that is the most expensive, that's where my cash is going to go and bring that balance down. I have a bunch of lines of credit among different policies that are very, very low cost. I don't really give them a second thought other than I know what my interest cost is each year, and I can easily cover it. As long as I can easily cover the interest, I don't worry about the loans in those. There's no minimum payments required. I don't even have to make the interest payment. But I try to do that every year. In fact, I do it every year. I make it a priority because that interest payment is painful. And I recommend everybody does this too. We don't want to start thinking about the cash value in our policies as like free money to just go use and take all kinds of risks with investment. So we have to recognize that the interest that we have to pay the insurance company to collateralize our cash value in our policies is actual real interest. If we didn't pay them, our policy would grow unobstructed, right? Using the policy does cost money. I want that interest payment to have to be made so that I feel the pain of it each year. And that tells me if I have the ability to, I'd rather pay that loan down if I can, if I don't have anything better to do with it, right? Well, it turns out I'm pretty good at doing a lot of stuff that makes money. And so like, there's oftentimes better things for me to do than pay down a 5% loan. So I'm willing to take on some more loan risk as long as I can cover that interest.
Yes, I think I'm sort of in a similar boat in the sense that I have cash in a brokerage that could pay off the loans in my policies, but I'm also earning higher in those brokerage than I'm paying in interest. It doesn't make sense for me to pay off those loans. And so to some degree, I do the same thing. It's just probably not to as large of a percentage of utilization, which maybe I should. I do consider that sometimes tapping those things and doing more, but I just haven't yet, especially I think with where I'm at. I think Jing mentioned her situation and not expecting some of the expenses she was going to run into with mobile home park investing. I thought I had plenty of cushion for a yacht charter business, but it turns out, lightning strikes twice, and that's sometimes you don't always expect those things. So that's where I'm being a little bit more conservative than I probably would have been had those incidents not happen. However, I think that I'm kind of in that same boat of like, well, if I can earn more money than the insurance company is charging me, then it doesn't make sense to pay off too much other than to service interest.
Yeah, I'm in a little different boat than you two. Like, Jing is taking on quite a bit of risk with some of her real estate investments. So she needs to be a little more conservative. You've taken on a huge risk with the boat, more risk than you anticipated that it was going to be, which impacted your ability to basically do what I'm doing. I'm taking the risk with my policies to grow them really aggressively and use leverage to grow the policies as opposed to using leverage to get a boat or using leverage to purchase some real estate. And I'm doing my other trading inside the market, but mostly in my retirement accounts. For me, all of this tends to work together because one of the ways I fund my retirement accounts is I get the money into my policies first. So it helps me to max fund my policies. I borrow from them at 5% interest. I dump into my retirement account, saving me 40% in taxes or so right away. That then I can trade inside my retirement accounts with that money. So I save money there. I'm only paying 5% over here. I get the death benefit. I get the growth happening in here. It's all tax deferred or tax free. It all works together for me.
Maybe you talk about this in your own channel, but 13 policies. And if you plan to keep growing, just say one day you get to 30 or 50 policies, how you manage all of those, the cash flow, how you fund it, how you take money, take the loan, when to pay back. Can you elaborate that a little bit?
Yeah, I don't have a specific number on when I'll be done adding policies, but essentially some policies are more attractive than others for borrowing against. And as we grow our cash value, and we make more and more money and we accumulate more and more equity, we're going to be storing that somewhere. So there's going to be a number of policies that I probably will just not be touching because I don't need to. I don't need to be using all of the cash value on all of my policies all the time. It just doesn't make sense. So some of those will be designated storage. And when I designate those as storage, they get moved to an irrevocable trust. An irrevocable trust is great. It takes things out of your estate for estate tax purposes down the road. I hope to be in a place where I have to worry about that estate tax exemption. And so When I'm not going to be touching the cash value in a policy, I can move that to an irrevocable trust. An irrevocable trust is managed by a trustee, not me. So the cash value is going to be a little bit harder to access. It doesn't mean that I can't if I want to, but I think just from a whole game plan point, if I just move policies over there that I don't plan on touching the cash value in, that'll be the first ones I move over. So essentially that's how it'll work. Many policies will probably be designated as I just don't have to do anything with it. I'll let them grow. I'm happy with what they're doing. And I'll have the few active ones that I'm constantly doing stuff with. And I'll probably just keep expanding as much as I'll be able to.
It seems to me that when you think about the whole story of your funding of your policies, how you started small and eased into it, I think one thing with me and how I approached this from the start was I came in with sitting on a pretty large chunk of cash that wasn't necessarily income, and I wanted to funnel that into policies, knowing that it is more efficient to have larger policies to do that. And I think that, so from the start, I've just ended up with what is an efficient way to get cash into policies on myself. I absolutely do want to expand, but I think it's just like, I think I started out a little bit different than where your situation is. Because I probably, even when starting out, was a bit more aggressive with what my target funding levels were for my 2 policies that I opened on myself.
Absolutely. So we get clients all the time that come in and they're going to start out small because they're not sitting on a bunch of cash. You just sold some property, right? And so you were sitting on hundreds of thousands of dollars that you needed something to do with, but you didn't have anywhere to deploy it immediately. That's like the perfect opportunity to set up a large policy, get the money in, knowing that it's all liquid, 90% of it's going to be accessible when you do find that next investment option. So from your standpoint, that was a great way to start. And yeah, that was still a big commitment. Like you have the ability, because of where you started dumping that money, you have the ability to put large amounts in every year. So you don't really need to expand the way that I did. Like of my 13 policies, 2 are really big. Actually, no, scratch that. Before I added the most recent ones, only 2 were big. Now 4 of them are going to be very large. But 2 of those 4, I'm done funding after next year, at least at a high level. I'm going to dial that way down, and then I'm going to be focusing on the other 2 that are now very large. And the other 2, I'll be able to continue funding those at a very large level for decades. The ability for me to be able to fund my policies is substantial for the next 30, 40 years. I will probably expand. Actually, I do anticipate expanding. I already have a plan to expand and get another whole life policy. But that'll probably be 2 years. I think I'm 2 years away from doing that one. But it'll all depend. I mean, who knows? Maybe I become the options wizard and figure out how to double my portfolio in the stock market over the next couple of years. And then we can up the timeline of all of this.
Yes. So I think connected to that, I did set up my policies specifically with the intent of being able to fund for basically 30 years or more. So it is just that initial foundation that was with the intent of funding these for 30 years. And so I don't necessarily need more policies on myself, but I absolutely do want to expand to the rest of my family to ensure that, we have coverage broadly and also to get diversified from a product perspective. That is one downside to saying, oh, well, I know I want to be all in on some great products. Yes, I have 2 policies and they are great products, but I don't have access to some of these other ones by virtue of not having those other policies. So I certainly also want to get some of these other great products.
Yeah, it's very interesting to me to hear James' journey, right? To build up different policies, to have a big pile of money as the IBC, the infinite bank. I think maybe I need to really plan and, look at my household future and what's the best way to what's the best way to set up some policies. I think there's some homework I need to do on myself as well.
It's possible you could be more aggressive and have a successful strategy, expanding sooner than you're anticipating. We could talk about that. Maybe you need to set up a consultation with me.
Definitely, for sure.
Well, I think we need to wrap this one up. Next week, we're going to be talking about where to find the cash to grow your bank. And I think we'll probably continue a little bit more on this conversation because we spent a lot of time, probably more time than expected, talking about all of our plans. We didn't even mention some other scenarios that people might need to consider expanding their bank. Like what happens if you don't qualify for life insurance? What happens if you start your bank, but now you can't get more policies on you? There are definitely other options out there. We'll talk about those next week. But for now, what is the call to action for our fine listeners this week? It's time for this week's call to action.
I think I would encourage everyone to really think about a little longer future, right? Not just focus on how much you can fund and what kind of policy you can get. Think about a little bit further and then think about as a project to really define how much you really want to build up your infinite bank. And then how much you can come up with the money to fund it, how you want to use it down the road. If you come with the approach of a project, you can really manage it well instead of just say, okay, I want to get a policy. Make it a project and then define it, manage it, and then I'm sure you will get a very sizable infinite bank. You can use it multiple times down the road.
One might say an infinite number of times down the road.
I would assess when you're thinking about how you might get started, determine if you weren't going to lose access to your contributions, because these policies you have access to borrow against. We've all talked about how we're actively borrowing against it. What could your savings rate be? Think about that. When talking about my own policies, my policies allow for me to have a savings rate very close to all of my take-home income. So that's me. You don't have to go that aggressive with it, but I think that's something to think about. And if you're interested, have a conversation with one of us around that. This is something that can allow for drastically increasing your savings rate, which can accelerate your time to financial independence.
I like that. And I would say a good call to action is to do some thinking like that. Spend some time, think about your budget, how much, I like that thought, how much can you save if you know that you have access to it? And if you're putting that savings into a high cash value life insurance policy, now you're really starting to accelerate the growth and compounding of the base of your finances. That's where we like to view these as the base of our finances. So just take some time. Think about it. It's really hard to do where you just take a few minutes out of the week dedicated solely to the future of your finances. But I think if you do that, you're going to find that the game is going to start changing. There's all kinds of neat things that open up when we really focus on that. I know that's what happened to me. There was a lot of years that I just spent working, and I just didn't really understand anything other than I get more money when I work. But once you come up with a plan for what to do with that money, or you start to think about ways to save from bleeding that money out in taxes or interest to other people or interest to other financial institutions, you'd be surprised how much it comes back to you and how much it starts to grow and accumulate and all the things that we can do with it. So with that, I hope it helps you. I'm James Barber, your Oregon Cash Flow Pro. I'm licensed for life insurance and annuities across the country. Would love to talk with some of you fine folks if you're interested.
This is Jing with Tech Exempt Millionaire Club. You can find me on the school community. We talk about different strategies to help you to become tech-exempt multimillionaires. I'm also a licensed life insurance agent in many states. Just feel free to reach us.
And my name is Carlo Vaquera. You can find me at netwealthfinance.com or on YouTube at netwealthfinance. And we'll work with clients across the country as well.
Take care. We'll see you next time.
See you next time.
Thanks for watching.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.